Obviously, a lot of news flow this morning to get through. It looks like Powell's the one after so much anticipation over the past few weeks. The fact that he's not an economics PhD, the first such person since the 80s, I believe, to potentially hold this role without these qualifications. Do you think that's concerning, or do you think it's refreshing that he comes from the private sector?
I think it's neither concerning nor refreshing. I think it's fairly normal. The things that you learn when you get an economics PhD are not essential to being a good Fed chair. And by now, Powell has the equivalent of much more than one PhD in the financial markets and in monetary policy, given all the time he's spent around Wall Street and in government since he left school.
Do you see him, given that he came from private equity, do you see him as having a cozier relationship with the banks? We're trying to sort of, I guess, work out if he's going to potentially be a Fed chair who's more in favour of a deregulated environment.
Private equity people tend to be very much focused on kind of capital adequacy, right? They deploy money in risky situations. And so they tend to be very worried about over-leverage, as opposed to people who come from banking, who tend to be kind of more willing to let banks do what banks do. In my experience, private equity people are more concerned that banks not wind up gambling with the government's money, which banks in some sense have, because deposits are guaranteed, are insured by the government. So it's not at all clear to me that Powell is going to be more deregulatory than Yellen. Rather, I think he'll be somewhat focused on different regulatory pieces of the regulatory process.
Like what, Brad? Where do you think he might be more focused on?
Again, that, the big problem that we had in 2007, 2009, came not out of private equity, came not out of the stock market, came not out and so much out of extraordinary amounts of overinvestment in the economy as a whole. It came out of a relatively narrow decision by a relatively small number of large banks to try to be a little bit too clever with the assets they held and told the regulators were AAA. The fact that banks did that, and the fact that that had such horrific consequences, not just for the banks but for pretty much everybody else, has focused everybody on the importance of making sure that our banks, both our official banks and also the shadow banks, the organizations that, while claiming not to be banks, act like banks, in that they borrow money, make investments, and leverage up and hope that that the water doesn't go out while they're exposed, that keeping a very close watch on those is, I think, going to be Powell's #1 priority, as it indeed would be of practically anyone who becomes a Fed chair.
Right, I was going to say that would be a priority for any Fed chair.